Well, hey there, everyone. Today is Friday, September 26th, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from a beautiful fall day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on day trading. He's going to be talking about how to trade his daily market levels. He's going to share when to day trade using options versus futures. He's also going to tell us when to verify or how to verify signals using market internals, two setups that work in most market cycles when you're looking to day trade, and from the mailbag, how to identify solo candles. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, so there are some ground rules. The ground rules are always be kind, keep to the topic, no political discussions at all, and also please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is sharing, because after all, folks, he's here to give us an edge and to help us become more consistent and confident in our trading activities. Now, for those of you that are with us every morning at 8 o'clock Eastern Time, we know that Roger basically helps us get up and ready for what's happening in the market. And he begins by talking about what's on his small cap watch list. And today we saw WAI above 905, Guts above 1.40, and MIGI above 65 cents. Now, guys, remember that when Roger selects these small cap stocks, he's really looking for price action, but most importantly, extreme volume. And remember that these small caps, they're not market dependent. They're not driven by the same things that drive large caps because, frankly, there's no institutional money at all in small caps. It's all retail traders like ourselves. Now, if you see something that you like, remember, only trade these during market hours. And if you don't see an entry before 2 p.m. in the afternoon, just forget about it and never, ever hold these overnight. Now, as far as Roger's catalysts for today are concerned, he was looking at the Fed initially. Once again, the core PC index was looking to come out at 830, and it actually was pretty darn good. It was in line and favorable. Also, once again, a catalyst were tariffs. President Trump announced that there would be a new round of tariffs out there, one of them on home furnishings, and we saw that Wayfair was down 3%. As far as chips are concerned, Intel was coming into the market plus 3%. Crypto, Bitcoin is basically sinking in price, and that was dragging coin and Mara down with it. Coin down about 1% and Mara down 2%. On the retail, consumer discretionary side, we noted that Costco, huge retailer, down 2% coming into the open. And on the industrial side, we saw that PACCAR was also up 6%. So those were the key catalysts. And remember, catalysts, what are they? We're basically looking at information that is known, that's key, but it's not yet priced into the market. And that's what a catalyst is. Now, Roger also shared with us what his pre-market stock watch list was. And we can see on the shorts, he was looking at Lulu, UPS, Carr, Target, Honeywell, PayX, IFF, and CE. For his longs, MSGD, FSLR, Marvel, MP. You could read what's on the screen here, folks. But the key thing is this, is he also shared with us three stocks, Lulu, MS, and GD, and these were nice looking A-line setups, and he pointed that out to us. So his closing comments on today, once again, the markets initially when we opened the room were pretty flat and looking random coming into the market, but we did note that bonds were moving higher, and after the PCE report came out, they actually accelerated. Along with that, we saw that the MAGs, the SPY, and the QQQ were all moving up above major support, and he was delighted to also see that QQQE and RSP were also following suit. So everything was congruent as the markets were all moving higher. But the question was, will this hold after the open? And will the markets actually close up today? And he did give us a warning. He said, guys, be careful. Wait until the first 30 minutes of the open, get by, because there is going to be some profit taking. There is going to be some liquidation going on. He expected it to be very choppy, and boy, was he right. He also said, let's just make sure that the markets are actually going to follow through on the pre-market momentum. So once again, these were his, I love these comments as we get ready for the market. And remember, these are pre-market. Now, the reason we're here today at noon is it gives Roger a chance to give us an update as to where things are midday, along with some critical education that he's going to provide. And to that point, here's what's on the agenda today. The focus is absolutely going to be on day trading, and this will be probably the last day that we give it this much focus. He's going to share with us how to trade his daily market levels that he basically supplies across the board on the major markets and indexes. He's going to share his thoughts as to when to day trade using options versus futures, because there's been a lot of questions about that. He also wants to help us understand how we can verify our signals using market internals. You know that his market internal dashboard is a key part of how he evaluates the markets, and he wants to make sure that we understand how he uses it to verify signals, in particular when we're looking to day trade. He's also going to tell us about two setups that tend to work in most market cycles when you're looking to day trade. And I think we're all looking for things like setups and confirmations to help us better understand these day trading techniques. And in the mailbag, once again, how to identify solo candles. So a lot of great education is going to be on tap for us today. Now, once again, folks, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and we do have some ground rules. Be kind, keep to the topic, no political discussions at all, keep side conversations. Please keep these to a minimum so that the rest of us can focus on the education and information that Roger is sharing, because, folks, he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. So that's what's on tap for today. It's going to be a great session. It is Friday, September 26th. As Roger said this morning, man, where has this week gone? It's kind of blown by, but here we are into fall. September is getting ready to finish up. And as we head into October, the fourth quarter of the year, we do have a general expectation that things could start to pick up a little bit. And I know Roger is going to be addressing that. We've got a great group of traders here in the room. Delighted to have so many of you here with us. I recognize so many of you. And I also like to acknowledge that not only do we have a strong contingent here from the United States, but we have a number of folks that are joining us from overseas as well. And I think that's absolutely fantastic. Just a little bit of a plug here for this morning's session. If you are not attending Roger's 8 o'clock pre-market open session, you really are missing. It's free. You can access it on his Telegram channel, and Roger just does an excellent job of setting the table for us and prepare us for what might happen during the day, and if you will, orient our mindset towards how we want to prepare for the markets. And once again, this is how Roger prepares for the market. That's what we're all here for. How does Roger do these things? How does he see the market? How does he see a setup? How does he determine the best trades to take a look at, going long, going short? What small caps? All of this comes, and it's every day, guys, that the markets are open at 8. It runs about an hour from 8 to 9, and all the sessions are recorded. So if you're here and you're not attending the 8 o'clock session, I'm going to question how serious you are about actually trading. because once again, you're really missing if you're not here at the 8 o'clock session. And I am delighted as the moderator to be able to share with you some of the things that was discussed, because once again, I just, it helps prepare us for what we might see midday here. But once again, I'm just giving a shameless plug for the value of coming to that morning pre-market open. So it's 8 o'clock Eastern time. 8 o'clock Eastern time every day that the market is open. It's absolutely free. We have over 700 people there and climbing that are joining that. So once again, imagine the edge that all of those have when trading the markets, and the edge you're missing if you don't attend. And with that, Roger, man, it's great to see you, my man. I'm going to stop the share here. I have been shamelessly plugging the 8 o'clock pre-market open because it's just such a great way to get the table set for the day. And I shared with people your closing comments is like, I like what I see, man. The bonds are moving up. All the indexes are moving up. You were particularly happy to see that the QQE and the RSP were moving up as well, and your comment was, and I love this because I know you're going to talk about it, was, folks, let's make sure there's follow through, number one. Number two, be careful in the first 30 minutes of the trading session because there's going to be a fair amount of liquidating activity, and there certainly was. And so here we are midday. I don't think there were any surprises for you, but I am pleased to report, I'm going to beat you to the punch, Roger, 2 really nice trades in the Alpha and the Trading Zone Live today.
Yes, and we took a nice profit on Citibank and A-Line as well.
Oh, outstanding.
Yeah, so we had a pretty good morning. Not really anything too eventful for, nothing bad, nothing at all for the pit. We're just kind of holding on to one position, and we've been doing some bonus trades around it. So that's looking okay. Not really concerned there. My concern is that market internals right now, let me just share my screen real quick.
Yeah.
Oops. Getting a lot of testimonials today. Thank you, folks, for sending it. I do appreciate it. My concern is that internals are looking really good here. The Volt is looking really good. It looks like we're going to go up. ADD's telling us a lot of stocks bounced from yesterday, so that's looking okay too. The bond market's not really hating anything. I mean, it kind of really went off on a ledge here and then sold off. I don't like this, but overall, the bond market's not looking horrible. Overall, it's not looking horrible. I don't like how it bounced hard off of this level. I have to see what this level is, and I will. That's the only thing I'm not too pleased about. In terms of fair value, you could see we're slightly below the fair value area right now. So look what happened when Matt, look at what happened when we came right here to this line. Look at that.
Yep.
Pow, smack down. These levels are very, very important, folks. Look at this level right here. Very important levels. So this is why when you get the Trading Zone Live, you get you get this platform with you, so you can kind of see exactly what we're seeing. So there's no surprises, basically. But again, not really seeing heavy selling pressure. Not seeing anything really bad with volatility. Bullish market internals, bullish Volt, classic divergence here. I know Matt is looking to take another long. I told him to take another one about 3 minutes ago, or a minute before we came here, but he never listens to anything I say, so yeah, that's irrelevant. Which is fine. He's got his own opinions. But anyways, hindsight is 20/20. Remember that too. Anyhow, we're looking okay. I like what I'm seeing. Let me pull up my TC2000. It's just easier to show daily charts with that. So, mind you, look at where the low on the SPY came in yesterday. Do you remember right here, folks, on Monday when we had this class, and I think Raleigh actually asked me, how far down do you think you're going to go? And I said, we're either going to stop at the 8-day or we're going to go down all the way down here. And just want to show you something. Look. Do you see that? Look at that. And look at that. Do you see why I drew these on here? Because they actually mean something. And they're actually pretty meaningful. So, and I did. And if you don't believe me, the beautiful thing about this room, everything we say here is recorded. And it's available to you on the live tab. And on Monday, right as we were right here, I said, I don't like this. We need to cool off. Where are we going to go, Roger? I said either to the 8-day, and if we break the 8-day, I said 8-15-day, we're going to come down right here. I said that's the worst case scenario because I don't see any major structural buffoonery in the market. And if you look at the mega caps, we didn't even go that far. We kind of stuck to the 8-day, which is telling us they're actually stronger than the broad market, which is good to see. The fact that we stuck here is a good thing. Now I want to see today. The big thing today, folks, and this is why Fridays are always a little wonky, I want to see the meat of the move close right here. Kind of like where we were a couple hours ago, between 9:30 and 10 o'clock in the morning. So that this makes a higher high, and then we close higher as well. Similarly, on the SPY, what I want to see right here on the SPY, I want to see the SPY. Let me just check this here. Okay. What I want to see on the SPY is I want us to get above the VWAP right here. Let me get my TC2000. Now I got my crosshair tool. It makes it easier to show you. So here, let's first take a look at bonds. So what is this level on the bonds right here? See how so a few things. Now that I have my daily chart here. See how we came up? I told you this morning, by the way, this is something we talked about this morning. I said it's really important for me to see the bond market get above this level and start filling in this gap. We said that this morning. It wasn't that long ago. You guys, even for those that don't have long-term memories, you guys remember that I said that. And look what happened when we came up here. Look at the selling pressure that occurred. That's not great. That's not great. But it's not the worst thing because we're still holding on to this level. It's just saying we're not ready to break this level up just yet.
Right.
And the day's not over. Market internals are not looking bad at all. They just made a new high right now. And even if this doesn't break up, it's not like we're like breaking down or anything. We've been sitting in this channel for a while. So it's not really a bad thing, but that's the level I want to see. Now I want to see this level break even more. Because look, once, twice, once this breaks through, it's going to give that market, that tailwind for that the market needs to really go higher. One of the reasons why I think the market peaked out and started going down today was because of this. But again, the day's not over yet. We can bottom out right here or right here, my levels from this morning, and we can just start coming back up. Oh, and by the way, Raleigh, look at how well we hit our that's the levels I drew this morning. Look at that. Does it get any better than that?
It really doesn't, Roger. And your point, your question was, will it hold and will it close above these levels? Those were the question marks.
Exactly. And if it does, what Raleigh just said, it'll be very good for the market. If it doesn't, it's going to be bad for the market. There's a good chance we're going to bottom out somewhere right here. Here or here. There's two levels here. Yeah, see right here and right here. There's a lot of stuff here. So I'm not, and there's really no more catalyst this week unless, Trump says something or, again, I'm just talking. I have no idea what he's going to say or he's going to do. But, or, some news comes out, but I think we're going to bottom out here and start coming back up. So keep an eye on the 88.70 level and 89 level, okay? Keep an eye on these two levels right here. Now, as far as the SPY, I could tell my tongue is getting tired from talking all this week. What I wanted to say was this, that you see how the SPY right now, the meat of the move is below this yellow line? We want today we want the SPY ideally to close. It already made a higher high and it already made a higher low. We're already in a better place than we were here. Now the only question is this going to be a short-term resistance area? And we're going to come right back down, or is this going to break through? So far, I like what I'm seeing, and I like how it held the 15-day down to literally down to, like my levels. Like this is like this. Look at that. It's really good. I'm talking about this, the 15-day right here at the bottom. So hopefully the low has been made already. I'm pretty sure the high has been made unless we really rally in the next couple of hours. And remember, Fridays we usually fizzle out after 2 o'clock. So all I want for Christmas is I want this right here. I want this right here to just move up and be above here. That's all I want. And if it does that, it'll turn green, by the way, too. Not that it matters. volume is also actually volume is okay. It's not that bad. Volume is okay. Let's look at QQQ. Now, you notice I'm really putting a lot of attention on here and because that's where the money is right now. I want this right here to just move a little bit higher, just a little bit higher and come up here and I'll be happy. But so far, this is definitely a step in the right direction, okay? And on mags, same thing. I want this, the meat of the move. See how the high's higher? We're starting to get back into this range. I like that. No problem. By the way, look at the high right there. Look at that. Look at these levels, man. They work really well. They really do. But we want this to move up there. And we don't want the low to break, and we don't want to test the 15-day again. Now, again, it's Friday. So those are the things that I'm watching really closely. I'm not really paying too much attention to intraday. I'm looking at the bond market intraday to see if these two levels hold, and if we start coming back up, that would help. And also, in addition to what I just said, one of the things that's moving in our favor that's helping this scenario play out is this: we're having divergence between the Vold and the this is the Vold and this is the SPY. This purple line is just showing us a 5-minute chart of the SPY. This is the 5-minute chart of the SPY, and this is the 5-minute chart of the SPY. Okay. So all this is the 5-minute chart of the SPY. This is the Vold right here. The candlestick is the Vold. And typically, usually, most of the time, some people here have said 99.9% of the time, have said like Richard, for example, he has said that I think it happens more like 85% of the time, maybe 90, but not 99.9. But anyway, it happens much more often than not that the SPY will catch up to the Vold, okay? That the SPY will catch up to the Vold. And so far, the Vold, all day long, to its credit, is making higher highs. And ADD is not really doing bad at all. I mean, this is not like, oh my God, 1,500, but, you know, it's a respectable number as long as it doesn't break down. And also, the tick hasn't been down ticking at all. We haven't seen anything below, like, you know, recently below 700. We're here, we've seen 866. So I have good reasons to believe we will come back up. Also, VIX has been going down. Even with the bond market doing this, VIX is still going lower. And again, we're out of fair value. This is the fair value area. The fair value area is above where we're at right now. So if we can break above 660, there's a really good chance that scenario, look what Richard just wrote, 99.98.5. He loves these Vold trades. He loves it. Most people do. That's what we do in Trading Zone Live. We took 2 winners today, by the way. And anyway, so that's kind of what I'm seeing with the market. The good, so let me just, instead of me like rambling on, let me just give you the good and the bad. The good is the Vold is moving higher. VIX is moving lower. The bond market's not really doing anything crazy at this point, and ADD is holding on, and we're below fair value. That's all the arguments for and also the fact that we made a higher high and a higher low, and we're respecting the 15-day on all the indexes. That's really good. The bad again is the fact that this is not above the 8-day EMA, but I mean it's still, you know, we still have 3 hours and 45 minutes for the day, and the fact that the bond market got really slapped hard when it started entering this area right here. I kind of hoped that it would, and it's now at the low end of this range. This is really the negative, okay? And the fact that it's Friday. So I kind of wanted to kind of give you guys both ends of the stick. Now, I haven't given you my daily stocks in a while. Let me do that right now. And then we'll go through our lesson. I want to give you a couple of lessons today. People have been sending me really good feedback, telling me they really like these lessons, day trading, swing trading. Matt, can you open the door, please? It's hotter than... Yeah, thanks. We don't have any air coming in here for some reason right now. Okay. So, Rick says, can I confirm that I received your email regarding the A-line indicator? Rick, I'm not going to confirm anything right now because we have 382 people here. and 77 people in the YouTube channel. So I'm not going to do any of that right now. Send me an email if you want to confirm that I got something. Thank you. All right. I just can't do it right now. Okay. Hey, Rihanna. Okay. So let's do this. Let me show you the short sides and then I'll show you the long sides. Okay. Yeah, let's do that right now. All right. What we're looking at is the daily time frame. Let's start with the short side, okay? Let's start with the short side, CRCL. That is a very nice looking A-line to the downside. Not overextended, as you could see. Let's see if there's any options for it. Go about, say we go about 14 days out. Oh, let's go 21 days out. You could do a debit spread here. Looking at the puts, we could do the 127, the 128 versus 127. You'd probably do them for 50 cents. If you can't do them for 50 cents, then you want to start looking for call credit spreads right here. Okay? That where you can get more than 50% for the risk, like we've been talking about the last several days. Right? You guys know what I'm talking about right now. Most of you should know what I'm talking about. Is there another class right now? Is somebody having a live class or something? Does anybody know? Most folks here know. Is anybody having a live class?
Roger, I'm just trying to think here. Let me take a look at what we got here.
Seems like I think because usually we have more than 500 here by this time. We have only 400. I'm curious if there's like a live class or something going on.
There's some stuff that happened at 11 o'clock, some stuff at 11:30.
There's stuff always going on, right?
Yeah, there's stuff always going on. Exactly.
Ah, T-Buzz. T-Buzz is having a class. That T-Buzz, that frisky T-Buzz.
He's a rascal.
He's a rascal. We know T-Buzz is a rascal. All right. So that's what I would do here. I would go 14 or 21 days out, 128, 127. Let's continue. CARR. Thanks, Hal. CARR. Look at this grinder. It's a grinder. Grinder right here. Hey, look, Volt is just moving right now. Like really moving right now. 21 days out. Can buy the 60, sell the 5750s. Excuse me. Yeah. Buy the 60s, sell the 5750s. You could do this for about, let's see here. It's about $1.10, but that's 2.5. So you're good. It's kind of where I would go here. Let's go a little further. IP, not overextended. Nice little short downside move. Let's go about 14 days out here. Right here, 4650s. 4650s right here. Even though there's no liquidity here, the option maker is not an asshole. He's not spreading this like the Grand Canyon. Look at that. He's being a nice guy. Remember what I always tell you? Don't look at liquidity. Look at the spreads. They'll tell you everything you want to know. Okay? They'll tell you everything you want to know. Okay, next one. 4. A little starting to get a little overextended. Not beyond it, but just a hair. So we got to keep an eye on this. Reasonably good trend. A reasonably good trend. 21 days out. 8250 puts right here. Okay. Wing. Every time I say wing, I think about Paul McCarthy. Now this is starting to get a little too much. You could take this, but be careful here. You could still take it if it's 1.5, but not over. That's like your limit. Anything beyond that is too much, and it looks like it's just on the cusp. 71 delta, too expensive. Let's see if we can do a spread. You can go ahead and buy the 240s and sell the 230s. You could do this for about $4, $3.50, $4, and that's like 35-40% of this. So long. All right, you want me to look at Meta? Let me give you every reason why Meta's bad. Okay, bull 22. It's not breaking out to the upside. It's not breaking down to the downside. It's between the 50-day and the 100-day moving average. I just gave you three reasons why it looks bad. Do you want me to continue? It doesn't have, when you look to the left, it doesn't have clearance here, and it clearly doesn't have clearance here. So you're basically just looking at a stock that's completely random and has no edge. Should I continue? Or have we had enough reasons why this doesn't look good? How about bull 22? How about I pick my stocks? They're a little better than yours. All right, let's continue. DE, a little grindy, but nice trend. Looks like it likes the 15-day EMA. It's bouncing off of it right now. We got plenty of room to the deviation level. Liquidity here's, you're gonna have to do a limit order. Let's see here. Go 69 delta, 475, or you can go to the 0.50, 467.50 versus 470, 465, and you could do it at $1.25 right here. There's a 94% reasons to listen to me. That's a good point. Okay, let's continue. Fresh Pet. I really like this one a lot, actually. I think I like this one out of all of them the most. It's a nice grinder. It's not overextended. 21 days out, 75 delta, 52.50 put right here. See, I'm not just telling you not to buy it or I don't like it. I'm telling you why I don't like it. That's the key here. Just somebody telling you they don't like it doesn't mean anything. There's a lot of things I don't like, but why I don't like it. Look how smooth this moves. Look how directional it is. Now, Meta just made an ass out of themselves at the live conference meeting they had. Does anybody know that? They just had I was just listening to it on the Howard Stern show. They were trying to preview their new glasses, Raleigh, and they were telling the glasses to turn to pick up the phone, and the glasses couldn't pick up the phone live, like in front of thousands of people. Oh. And then they asked the glasses to give them a recipe, a cooking recipe, and it couldn't do it on the cooking recipe, and it was all caught live on camera. This was like their big thing. Now, that has no relationship to why I don't like Meta. I don't like Meta for technical reasons, but fundamentally, they just made a real big ass out of themselves. Yeah, it's funny that you mentioned Meta because I was actually listening to that conversation right before I came on here, so that's why I thought it was kind of funny.
It was like, I don't know how many years ago, remember Microsoft had a big thing and they were standing up there and they had the blue screen of death. It came on.
It happens sometimes.
It happens. Yes, it does.
But I will say this, since we're on the topic, that they'll get it right. They'll get it right. Of course.
But it is Murphy's Law.
Yeah, Murphy's Law when it comes to trading, money, friends, love, loyalty. It never fails. It only fails when it comes to like stupid things, right? But it never fails when it comes to like life, your life, right?
Your life.
Right. So, but it always, demonstrations, my God. Yep. By the way, I'm not looking at the SPY right now, but look what happened to the Volt. Remember how I said how it was right here? Look at the SPY now, how it's coming back up here. So, and look, we're in that. Remember I told you it needs to get inside this area? Thanks. I was totally like in another planet right now. 28,000, Richard. Very nice for the day. Nice way to end the week, to start the weekend. So you see how this is accepted, this level? So the next level is going to be right here, the 662.53 level. That's going to be the next major level, okay? Very nice. Very, very nice. So, no, I don't like Meta, and nothing to do with the story. The price action is just... look. What do you do with that? All right. Okay, so let's continue our examples. Long side now. HP. Actually, not yet. It has to cross the 200. So not yet. Almost. Johnson & Johnson. I like the stock a lot, actually. I may want to buy this stock today or tomorrow. I do like the stock a lot. I really do like it a lot. That's a nice looking stock. I'm not big on buying stocks that I'm not if I do buy it, it's going to be a swing trade. But Friday swing trades, I don't know. Monday swing trades are better because you have that decay over the weekend, and I don't like that. So, yeah. Anyway, I'm just thinking out loud. That's all I'm doing. Ignore me, please. Right here, 175 call, October 17th. Right here. Doesn't look bad at all. Not that expensive either. Let's. Oxy. Oxy doesn't look bad. Doesn't look bad. It's just getting up there, but doesn't look bad. And it's above this price area right here. US dollar. If the US dollar goes up, it'll cause energy prices, obviously. 46.50. Right here. 46.50. Thanks. I appreciate that, Kevin. Christopher, I explained it in great detail. Go back and review the show. I explained it in great detail. I actually did explain it in great detail. APP. That's a very nice trend right here. Overextended, comes back to the 8-day, and now it's coming back up here. Circle. I really like APP and Johnson & Johnson, but this is a software stock, and I already have one. So, I'm just thinking out loud. 21 days out. See, very, very expensive. Nobody's going to pay $4,400 for one option. So here's your solution. You can buy the 665, and you could sell the 670 for $5. And you, instead of spending 44, you spend 5. It's not bad, and you still have to. You get a chance to have your cake and eat it too. It's a nice looking trend, really nice looking trend. Matter of fact. Okay, sorry about that. Needed to do something for myself here. That looks very nice. APP. Doesn't it look good, Raleigh?
Oh my gosh, yes.
Beautiful, right? Beautiful,
That's
clean.
Yeah, it's what you're
Beautiful.
looking for.
It's exactly what you're looking for. General Motors. Overdone. I liked it here. And plus, we already took a profit today. We took a 34% profit on. Oh, that's another one we took profit on, Raleigh. We took a profit on a weekly cash flow.
On General
GM.
Motors? Okay,
So we took a
good.
profit on General Motors, we took a profit on A-Line, and we took 2 profits on Trading Zone Live today.
Yep.
Yeah. And it's only Friday at 12:30.
And Matt is zeroed in, man.
Oh,
he's zeroed in.
He's completely
He's like a
on.
bombardier. He's getting ready.
He is. That's all he's just laser focused on all this stuff.
I love it.
Yeah, so it's too late for this. It's too late. We need to wait for this to cool off. You know, Bull 22, you can rewatch the YouTube live. It's live. You could just pause it, rewind it. You could do all that stuff live with it. TJ Maxx. What a nice one. Another one I really like. Circle. Oh, really nice relative strength. That looks really good right here. 74 right here, 74 Delta, 140 call. Richard, I'll post them for you. I'll post them for you. In a different place. I'll post them. 140. Right here. 74 Delta. Oh, what a beauty. Look at this one, guys. Hey, Matt, do you have you want an A-line, Matt? Take a look at APTV right now. And the options look pretty good too. I like what I'm seeing here. This is very nice. I got to tell you guys, I pick pretty good stocks. I'll tell you that.
Yeah, you do.
I actually do pretty good stuff. I'm looking at these. I'm like, hey, these look really good. 83 Delta. Richard, congrats. 35.5 on the day. Wow. Very, very nice. Very, very nice. Good way to start the weekend.
Mm-hmm.
You're welcome. And I'll post it for you somewhere else. 82.50 right here. 82.50. Yeah. Matt, this one looks pretty good too. TJ Maxx and Johnson Johnson. Just FYI. Write those down, okay? I like this one, OR. I got to tell you, I'm giving you guys like real red meat, right? Like pure gold right now. This is really very nice looking stocks, if I do say so myself. 35 right here, call. $89 right here. And shoe. Like, don't throw a shoe at me. That's a really nice looking stock.
Shoe fly.
Matt, add SHOO to your list. SHOO. Shoe. Remember, do you guys remember Wolf of Wall Street?
Yeah.
Huh?
Insane movie.
Do you remember that? Add that to your list, Matt. These stocks, I'm telling you, these stocks look fantastic today. And the reason why we have so many nice looking stocks is because what has the market done in the last few days? It went down. Remember, overextended. Remember, I was like the boy who cried wolf last week. We're overextended. Look at this stock. Look at this stock. Look at this stock. I can't find any good stocks. Look at this stock. Look at this stock. Look at this stock. Look at the.
Yep.
I was like going like look at Mags. Look at Mags. Look at Mag. 5 days ago, and that last Friday, and what about now? Got some really nice looking pullbacks.
We were looking for it to bottom out, and it did.
I did, and by the way, folks, I'm showing you some really nice looking stocks. I just want to take a little peek at the SPY to see how we're looking. See, I want to see this right here above. I'm being very specific with you. I'm not mincing words. I want to see the SPY right here, right here. Okay, now somebody asked me a couple of good questions. So I want to answer some questions for you guys that you've been asking me, okay? All right? Some good questions you guys have been asking me. What levels when you and Matt are day trading the SPY, the index in Trading Zone Live. This is about Trading Zone Live. What levels are you looking at, Roger? Are you looking at these levels? Or are you looking at these levels? Okay. So I want you guys to understand. If you've been doing this for as long as I have or Matt has, you will see these levels. We see these levels on the chart without the lines. We know exactly where these levels are. Do you notice in the morning when I draw them, I don't sit there and go, okay, do I put it here or do I just instantly put it where it's supposed to go? My eyes, when I look at this, it pops out at me. You understand? You do this every day for 31 years, they'll start popping out for you too. You know, it's not a magic. It's just time. You know, you drive the same street 1,000 times, you'll be able to identify every house, every garbage can. If something gets moved, you'll know about it right away. It's the way our minds work, folks. So Matt and I know these levels. We don't need to, even though we have these levels, we don't need to rely on these levels. We know exactly where the support is. We know exactly where the resistance is. We know exactly where the overnight market price is. And Matt has them on his charts as well, just looking a little differently. These levels are more important. These are the major levels, okay? These are the major levels, including the VWAP. So these levels, we look at, if it hits this level or this level, it hardly ever hits this level. But if it hits this level or on the bottom, this level or this level, we're going to be watching very, very closely versus it hitting one of these levels, okay? You know why? Because those levels are based on daily price data. These levels are based on intraday price levels. Daily price levels always have more weight. Okay? Does everybody understand what I'm saying right now?
Yep.
Do you guys understand? I just want to make sure the folks understand what I'm saying here. Cool. And you know what? I apologize. I didn't even say good morning or good afternoon to everybody. Good morning and good afternoon. I had so much to talk about today that I didn't want to. I just didn't want to have to take the time. But good morning, everybody, and good afternoon. Hey, Tim, Sylvia, John. Good morning, everybody. Good morning. The weekly levels, the weekly levels you're getting now into a different time frame. The weekly levels are really important if you're trying to pick high and lows in the SPY using the daily chart. I only trade with the trend. So for me, those levels are just they theoretically you're right, and yes, they do, but the time frame and me just don't we just don't jive that time frame. So hey, bull. So my time frame and that just they don't mix. Okay. So how would you use these levels? Let's say you don't have Alpha Zone Pro and you don't have access yet to Trading Zone Live. And believe it or not, Raleigh, we still have like one or two spots left of Trading Zone Live. I think
I
we're
know.
gonna be talking about that today. I think we got like two spots. It's gonna get down to the wire today, literally getting down to the wire. And I know for a fact today is going to be the last day because this is it. So how would you use these levels that I give you? And I do give them to you every day on the Telegram channel. I'm going to show you right now. Okay. So what you want to see is you want to see price touch that level twice. So in other words, if you see a price, I'm talking about this right now, these levels right here. So for example, you see how we went here, we touched this one time
Right.
and we couldn't break. And you see how we touched it twice with the little wick going below it, but the meat of the move is above? That's telling us that price will probably revert higher. Double touch. I want to see a double touch. A double touch. Preferably with a wick outside of it. So right here, right now, you see how it went three times above this level, but we couldn't go to this level? So now I'm going to assume we're going to break down. So it's kind of, and let me explain to you why I do this. Okay. This is really important. Now, Richard, if you're here still, and Bugs, I want you guys to pay attention because I never really explained this before. So I'm going to explain something really good to you guys on a Friday afternoon at 12:38, where a lot of people are asleep at the wheel. I'm actually going to teach you something good and reward you for being here. So the reason I follow this rule, double touch with a wick below, path of least resistance, a lot of wicks, is because that's what the algos are programmed to do. If you talk to, and you guys don't do this, you don't talk to most hedge funds, but the way the algos work is this. And I'm pretty sure there's a video game like this, but imagine the game where a snake moves and as soon as it can't go anywhere, it just reverses course and it goes to wherever it can go, and wherever it can't go becomes a dead end. Okay? That's how algos, see you later, Ken. Take care. That's how algos work. They go, they try to bottom out. No, okay, we're going to try again a few minutes later. They try again. They can't. Okay, we'll go the other way. Then they go the other way. They try once. They hit a wall. They try again. And then they start going the other way. But that's usually how algos work. That's how intraday algos work. They use a two-touch rule. Why? Do you know why they use a double touch rule? Because it's human nature to try something the second time if it doesn't work the first time. That's how we're built. Remember, what are the algos trying to do? They're trying to trade against us. They're trying to go for our biggest weaknesses. Okay? That's what they're trying to exploit, our biggest weaknesses. So it's like a spider crawling through price, and you're trying to see how that spider, whether the spider gets through these levels. Okay? And what you want to see is you want to see wicks. Wicks are a good sign. So I'm giving you some really, yes, this is very interesting, and you're not going to hear much about this. A few signs. Trying twice to get past a level and not being able to with wicks. That's a big, big red flag. Another big red flag, not being able to get halfway point between the current bar and the next bar and wicking out like this, wicking out. Wicks, usually wicks like this, are a sign of weakness, of something tries to hit and boom, sellers come in and slap you. Okay? Hey, Hopiamatic, how are you? So again, wicks, a lot of wicks between the lines, the first line and the halfway line, big red flags. Okay? Wicks near the VWAP are huge, or bounces near VWAPs are huge. So how do you trade these? Okay, you look for a double bottom. You look for double bottoms. You look for areas where only the wick moves above it or below it, like this right here. See how it tried to break, and then it goes here and it tries it again, and then it just comes right back down. So, uh, Celeste tweezers. What does that mean, Bugs? I don't know what that means. But anyway, and by the way, see this line right here? This is yesterday's closing price right here. That's a level, by the way. Bounces off my line into yesterday's close, can't break it. Tries to do it twice, tries to do it again. Tries to do it a third or fourth time, can't do it, starts coming back up. So look for wicks. Look for wicks either right at the line or look for wicks at the halfway. If you see that this is starting to move 50% above between this area and this area, the odds are it's going to traverse. Okay, but if you see this keep tweaking out like this, and remember, don't make any determinations till the bar is closed. A lot of people, they like to trade these before the bar is closed. Let the bar closed. Let the bar close. Train yourself. You don't have a confirmation till the bar closes. About 15% of you, 10 to 20%, about 15% of you make a very, very, very consistent mistake. A very consistent mistake. You see price level break an area like this, and you think that's it, it's done, but the bar is not closed yet. What if this bar closes right here? You see? You don't know when this bar will close. Let this bar close. That's what a confirmation is. You need a confirmation. So don't make predetermined judgments based on an existing bar. Okay? Now it's going above this level. Still hasn't closed yet, but at least it's already above these levels. And now it's way into this level. The odds are this will traverse. But that's how you could do this on a 5-minute, you could do this on a 3-minute. I don't recommend you do this on a 1-minute. But yes. And by the way, the market is starting to creep back up, which is very nice. Remember what I said this morning? We want to be above this level.
It was interesting that level we're looking at here, Roger. At one point in time, it was an area of resistance, and now it's establishing itself as an area of support.
Yeah, and one of the keys was it had to overcome these wicks. These wicks are very powerful, especially when they happen. Now that bar closed, so we have a confirmation of a higher high. But what I see a lot of folks doing is they try to trade off of a bar before the bar closes.
Yeah.
You don't have confirmation, so you're going in premature, and that bar ends up closing 2 minutes earlier right here. Okay? Yes, and that is very good for runners. Is this being helpful to you guys? Are you guys getting some education from this? Okay. Now, when I'm looking at these levels, I'm looking at all of these wicks, schmicks, all that stuff. But when I'm looking at here, the major levels, I'm looking for the momentum to coincide. So, for example, if I'm looking to take a short, like we just got a short signal right here, literally, we just got a short signal right now in real time. I want to make sure that this is also moving down. You see that? So we just got a short signal right there. But notice something. Is the short signal near this area? No. Nowhere near it. Look. We're nowhere near this area.
No.
We're nowhere near this area. So if you use a combination of these levels, and I know Richard does this a lot, if you use a combination of these levels and these levels, you start getting a really good feel for what the market is doing. Okay. No, the bar hasn't closed, but it needs to come to this area. I'm saying I wouldn't be taking a short here. This is too low. I would want to see a short from this area right here.
And Roger, those levels right there, those are the market maker levels, aren't they?
These are market maker levels. These are levels that the market makers set. These are the levels that the market makers. These are the levels that the market makers have. So these are very key levels.
Yeah.
These are key levels. These levels are based on actual price, volume, and all of that.
Yeah, implied vol, everything. Yep.
Good. All right, now, folks, I'm gonna tell you something, and I know a lot of you are learning a lot of information here, and at the same time, let me just say hello to everybody on YouTube here. Wow, oh, we're getting a lot of feedback here. That's nice. Thank you, guys. Woo, look at Mike says using AZP scalp. Matt, can you grab that and put it in the testimonials from Mike Bernard on YouTube using AZP made $3,000 today? That's very nice. We're getting a lot of really nice feedback. Wow, we got 93 people on YouTube. That's where everybody is. They're on YouTube. You guys are playing hooky on YouTube. All right, Matt, we're about to have a class, and this is the last time I'm going to have this class for the foreseeable future. What that means is we were offering a discount on the Trading Zone Live. We had 2 nice winners today. The program's doing great. I'm going to do a class, and I'm going to talk about a lot of the stuff we just discussed. I'm just going to talk about it in a slightly different, from a different perspective. So if you're interested in day trading, if you're interested in these levels and how Matt and I day trade, I highly encourage you to pay attention. Also, this is going to be the last time I am having this class, probably over the course of a quarter. So if you want to save some money, like a lot of money, today there's just literally, how many did we sell yesterday? Like, I think there's like 5 spots left.
There's 5, and
there is
yeah.
5. Okay.
Yeah.
All right. So folks, there's 417 people here, and there's 5 spots left. I'm just going to leave it at that. Okay. I'm going to go ahead and close the chat. I'm going to spend about half an hour on this. This is actually, so the question is, why should you listen to anything I say? What's in it for you?